Again, they made up the crap. They put it up 70% in 1 year. 70% in 1 year. So what would be 70% increase of 4,000?
So you could have gold traded in the market for a price lower than 68 or 7,000.
No, it'd be way higher.
That's what I'm saying. So if they value gold at 7,000, then everyone else would have to value their gold on at least 7,000, right?
Exactly, and it goes higher than that. You can see it go to 10,000
for another few weeks. McGuire says the gold revaluation is already underway. It's very possible this revaluation is being coordinated among all the major central banks, that they're already in on it, much higher, so that whatever they lost in the devaluation of their currencies, they would recover through the upward revaluation of gold.
Gerald Celente and Chris Powell outline how a global gold revaluation may already be unfolding behind the scenes, driven not by market forces but by coordinated central bank policy. When fiat currencies erode rapidly, governments need a mechanism to restore balance sheet strength, and sharply revaluing gold becomes the simplest and most effective tool. A 70% upward adjustment, similar to past episodes, would push today's $4,000 gold towards $7,000, instantly forcing every nation to recognize a much higher valuation. In a stressed environment, that figure could temporarily overshoot into the $10,000 range as liquidity floods into hard money. Analysts like Powell note that such a move may not be speculative at all, but structured, pre-planned, and synchronized across major central banks to offset massive currency and bond losses. The higher the revaluation, the more rapidly financial systems regain solvency, making gold the ultimate reset instrument in a fragile global landscape. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
Go back to the Trends Journal, top trends for 2024. Golden year for gold. Gold went up 27, 30%. And then we said Trump got into office, gold prices are going to keep spiking. Go back to October 16th. You could look it up. Go to our YouTube, Gerald Celente, or Trends Journal. And I said that gold would go down about $500 an ounce because it really spiked up, and nothing goes straight up or straight down. You have to have it correct. The next day, gold hit $4,379 an ounce. That was the top. The next week, boom, goes way down. $500 it ended up going down. Last Thursday on our podcast, I said gold has to solidify above $4,000 an ounce. Once it finds a solid base over $4,000 an ounce, it's going to keep going back. And as we went on the air, it was at 4,194. It hit 4,245, and it backed down. So it stays above 4,700, 4,070, 4,100. It's going to keep going up. Same with silver. Again, you nailed it. You made it very clear. It's the geopolitical and socioeconomic uncertainties that are going on. And they're going to keep ramping up these wars. Israel's going to keep ramping up the war against Iran. Ukraine's going to keep ramping up the war. Russia's going to keep ramping up the war. Russia said that no ceasefire, no end to the war. I mean, Ukraine's losing this war. And they're wiping out their energy sources. The people have no heat, no electricity. And again, you go back to the Trends Journal on February 22nd, 2 days before the war began in 2022, we said there's no way in the world that Ukraine could defeat Russia. Russia beat the Germans in Operation Barbarossa after World War II, after the Germans killed 25 million of them. And they were the first ones to beat the German. What makes you think you're going to be able to beat them? Is Ukraine. So they're going to ramp up. You're going to see a false flag event. Maybe they'll hit a nuclear power plant to get the people to continue this war. And that little, I call him Heil Merz, the little clown boy over there. That's the Chancellor of Germany. Oh, from BlackRock? Yeah, that guy. Germany's been in a recession. This is the third largest economy in the world. The largest economy in Europe has been in a recession for 2 years. And now this crap spewing out of Merz's mouth. Oh, we're going to have growth this year. You know what the numbers are? They expect the GDP to grow by 0.2%. What, are you kidding me? That's not. Oh, but we're going to borrow $1 trillion to build up our defense, because we have to stop those Russians. $1 trillion. Oh, we're going to build our infrastructure. We could hold the tanks. Oh, these are the Germans. You like World War I? Nah, I like World War II. And look at that little clown boy over there in front. Macron, a little garçon with a pecker smaller than this. We're going to maybe send troops into Ukraine. One country after another, talking about building up the war against Ukraine. These wars build up. Again, it goes back to gold. It's the number one safe haven asset in the world. And if you didn't have these cryptocurrencies, gold would be $6,000, $7,000 an ounce. I've been following gold since then. And they keep saying, like they have back in the late 1970s and early 80s. There's no comparison. Back then, America was the world leader in many, many different ways. Those days are gone. You look at, I forgot the numbers, but China's GDP, India's GDP back then, it was nothing. And now it's like $20 trillion, China's. You look at the BRICS, they've had enough of dollar denomination, and it's going to be the death of the dollar. And gold is dollar based. So again, the lower interest rates go down, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go, because it's cheaper to buy in other countries as their currencies are going up. And again, the death of the dollar is coming. This is not the same America as it was back in late 1970. Again, China was nothing. India was nothing. There were no BRICS. So it's a different story now. And so we can see gold prices, escalating very rapidly. They made the people turn in their gold in 1933. They gave them, it was around $20 and I think 60 something cents an ounce. The next year, the Gold Reserve Act, they raised the price of gold 70%, around $35 an ounce. That's after they stole the gold from the people, gave them nothing, and then raised the price. Now let's go back. Let's go back to February. Trump and Musk said they were going to go into Fort Knox to see how much gold we had. But here's the bottom line. They know what's in it. So maybe this could be the next fiction. They'll say, we got more gold. We got so much gold. We're raising the price of gold. They'll raise the price of gold to do away with the debt level. That's a possibility, which would drive gold prices way, way, way. Again, it's a wild card. And a wild card, I've been at this 45 years. Every year we do top trends. This is the only year we had the wild card with Trump coming. So you never know what card's going to be played. They'll say it's worth 7,000. They'll make up something.
Right.
Again, they made up the crap. They put it up 70% in 1 year. 70% in 1 year. So what would be 70% increase of 4,000?
It would be 6,800, something like that.
All right. They did it before. They could do it again.
So you could have gold traded in the market for a price lower than 68 or 7,000.
No, it'd be way higher.
Yeah,
it'd be higher.
Yeah, that's what I'm saying. So if they value gold at 7,000, then everyone else would have to value their gold on at least 7,000, right?
Exactly. And it goes higher than that. You can see it go to 10,000.
Gerald Celente notes that the geopolitical climate, deepening global recessions, and accelerating conflict cycles are all driving gold into a robust structural uptrend. The metal already surged in 2024, corrected sharply, then rebounded to hold firm above the critical $4,000 level, exactly the base Celente said was needed for the next leg higher. As wars expand, currencies weaken, and major economies slide, gold remains the ultimate safe haven asset. Celente also reminds viewers that governments have revalued gold before, most notably in 1934 when the U.S. raised its price by 70% overnight. In a world of spiraling debt and shifting power blocks, a similar revaluation today could propel gold towards $7,000 and even spike into the $10,000 zone if policymakers decide to reset the system. Let's get into the interview.
The time is when London opens, and London is really the headquarters of the Bank of England, and the Bank for National Settlements trades in London. And that's really where most of the derivative trading takes place. Listen, I think for at least 20 years now, the trend in daily gold price trading has been to rise during the Asian market hours and to fall back dramatically during the Western hours. The West has been selling mostly derivatives. The East has been buying mostly real metal. And I think somebody did a survey, something like 15 years ago, and found that if you bought at the Asian Open and sold at the Asian close, and then bought again, you'd always make money. Now that can happen only if there's some policy in effect that says you can't let gold go up over in these trading hours, but nobody can control it in the other trading hours. It's a long pattern that's been going on where gold is moving from west to east. We have been pointing out for years that official gold data is useless. The secret March 1999 report of the staff of the International Monetary Fund was very explicit, saying the IMF was going to refuse to let central banks distinguish their gold in the vault from their gold out on loan, because if the markets knew how much central bank gold was leased or swapped into the market, then the market would know just how able central banks would be to continue to intervene against the gold price. So the secret March 1999 report of the IMF staff admitted that the official gold reserve reports are fraudulent. They don't distinguish the leased gold from the unencumbered gold. Saudi Arabia was caught, I think, 10 years ago not reporting gold reserves to the IMF in its full complement. China is estimated, well, I guess China has said it's got something like 3,000 tons or thereabouts official reserves in the account of the People's Bank of China, but the import data suggests China's gotten far more gold than that in the last decade. They're reasonable experts have estimated that the real Chinese government gold reserves are in the tens of thousands of tons. Certainly that insofar as China now is offering to vault sovereign gold reserves and is trying to internationalize the renminbi, gold is very useful to them in that, and they probably have something like 40, 50, 60,000 tons, and with that amount of gold, they can remonetize gold around the world, which I think is their plan, because nobody's going to trust the currency issued by a totalitarian government. But you can test the gold that you take from a totalitarian government, and you can see that money's going to be pretty good. I think gold is the financial mechanism that China is going to use as a counterbalance against the United States. Well, I'm following closely the talk of revaluation of gold. Of course, gold owners love to hear talk about revaluation of gold. Andrew Maguire, who's the London metals trader for Kinesis Money's Live from the Vault program, several times has shown gold price charts suggesting that gold revaluation is already underway, that gold has been rising in the last year in what Maguire calls a stair-step pattern. It goes up and then hangs at the stair-step for a few weeks, then goes up and hangs at the stair-step for another few weeks. Maguire says the gold revaluation is already underway, and it's very possible this revaluation is being coordinated among all the major central banks, that they're already in on it. The U.S. economists Paul Brodsky and Lee Quaintance did a paper, I think about 12 years ago, saying that us gold bugs should stop complaining about price suppression, that the real central bank game here was to hold the price down long enough so that gold reserves could be distributed among the major central banks, so that all the major governments would be hedged upon the inevitable devaluation of their currencies. Brodsky and Quaintance said at that point central banks would revalue gold much higher, so that whatever they lost in the devaluation of their currencies, they would recover through the upward revaluation of gold. That always struck me as a very plausible outcome. And I think there's certain things that are happening suggesting this is already underway, as Maguire says.
Chris Powell highlights how the long-standing shift of gold from west to east is now exposing the cracks in official reporting and the fragility of the Western paper-based system. For decades, Asian trading hours have reflected steady physical accumulation, while Western sessions, dominated by derivatives and policy-driven interventions, have consistently pressured prices lower. Powell explains that official reserve data is meaningless, pointing to the IMF's own 1999 memo, which admits that central banks intentionally blur the line between leased and unencumbered gold. Meanwhile, China appears to be quietly accumulating tens of thousands of tons through opaque channels, positioning gold as the foundation for a future monetary counterweight to the US dollar. With analysts like Andrew Maguire observing a clear stair-step revaluation pattern, Powell argues that a coordinated global repricing may already be underway. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.